Morning, everybody. It's Nigel Hawks. Friday. It's uh, Wednesday, the 23rd of February. Excuse me. I'm slightly confused. I'm down in Australia, and I've got to tell you the jet lag is an absolute killer. But I wanted to show you today really how to use Hawkeye and the Fat Man to show you the right pair to trade, and it is correct over and over and over again, and I do want you to be a successful trader. So let me just show you again how we use this. The currencies that I'm interested in are the ones that are coming down from extremes, like the red line here, which is the Australian dollar, against the white line, which is also here rising from a bottom. So I'm particularly interested in the Swiss franc coming up. That's a major currency. I'd much rather be in the major currency than look at the Australian crosses at the moment. So I set up my page with all the crosses on the Swiss, and that's what I have set up here. For those new to Hawkeye, the Fat Man is an indicator which shows all the currencies. I've divided them into each other, weighted them, and run the Hawkeye trend through them, and I have that set at 720 minutes. I like having the Fat Man set to twice the speed of the chart that I'm actually looking at. So I look at a 360 minute against a 720, and that will give me my setup. So now if we look around, you can see that every single currency is in decline against the Swiss. But the only ones that I'm interested in are the ones that are in opposing direction. For example, the euro is going up, which is this green line here, and the Swiss is going up. Although that's giving me a very good short, I'm not interested in it, because at the end of the day, trading is only two things: controlling risk and controlling your emotions. And the risk is too high if both of these are going in the same direction. I'm looking for the opposites. So my main one that I'm looking at would be the Australian dollar, the red line coming down and the white line going up, and also the Canadian, which is the yellow, going down, which is here, and the Swiss going up, and the US dollar going down, and the Swiss going up. So those would be the three currencies that I would really want to pick out. And the New Zealand dollar, well, that came in a little bit late in the day, had a rally, and then for those poor people who've been involved in the earthquake, the currency got sold off after that earthquake. Appalling news. But let's go and have a look at the Australian dollar. We could look at the US, but let's just do this because time is of a premium. And then we have to work out, well, how are we going to get out? Well, Hawkeye has three ways of getting out. One is to trend follow it all the way to the end till you're stopped out. And you can do that by tightening up your stops. If you go into the Hawkeye trend, we can say, let's put the pull in stop to on, and we'll say, look, after 15 bars, I want you to pull in the stop to the aggressive trend value. And if we do that, you'll see that the stops tighten themselves up, which are these little dots. So you can follow this in classical trend following form until you do get stopped out. You're always going to give back quite a bit, but that doesn't matter. Or we can go and put on our levels, which is loosely based on Gann's work, and I thank Murray Maths for teaching me this. So you can see that here we're looking for the markets to come down to 3, 5 and 7 levels. It comes down to the 3 level. If you were trading more than one contract, if you were trading 3 contracts, I try and teach you to take one contract off as it touches the 2 level, another contract as it touches the 3 level, and the third contract free to roam. And when I say free to roam, I mean that if it closes if it touches the 4 level and then closes above the 3 level, you exit. That one didn't touch the 4 level, so our stop on this bar is if it touches the blue line here, the 2nd level. So we're still holding this, and our stop is going to be a close above the 3 or a touch of the 2, a close above the 3 or a touch of the 2. That's our stop. That's one way that we can do it. The other way we can do it is by putting the Hawkeye grabber on. And the Hawkeye grabber is just set to nominal tick values that you set. Now, because this is 360, I like trading it obviously for a much longer and wider run than if I was trading a 3-minute. So I'm looking for 70 ticks per bar. So let me just do that, and we put that on from our entry bar, which is there. So each of these lines here represents 70 ticks. So again, I'm always trying to get to the sunshine level, which is the yellow line, which is a 3-to-1 risk reward from the stop. 3-to-1 risk reward. If I'm trading 3 contracts, I take one off on the 2 level, one off at the 3 level, and I'm watching it. It's touched the 4. If it closes above the 3, I'm out. If it goes on down and touches the next level down, I will then keep stepping down. So I've locked in a 3-to-1, 2-to-1, and whatever happens to me now, I'm going to get some part of another 3-to-1 on my final last contract. And you can apply this to any of these charts here, and it works time and time again. Just for interest, let's have a look at the magenta line going up, which is the Japanese yen. The yellow line's coming down, so let me go and put the yen Canadian on, and that'll come up on here, and you'll see, hopefully, yep, boom, there it is, 2 wide bar rules. There's the entry, and again, we could have taken that down. Have I got my levels on or grabber? If I put the grabber on, you can see that we're on our way down. We've only done 70 pips. That will take us down to 140 pips, etc. You've got to sit in these trends. You've got to watch them and hold them. We know where our stop's going to be now. It's not going to be the far Hawkeye stop, because it's been down and closed underneath the dotted line, which is just 70 ticks. That's a 1-to-1 risk reward. If it now closes back above the green line, which is your entry point, you would be out for a scratch trade. So thank you all very much. I hope you enjoyed this. Please come to the trading room on Friday. It's late in the evening. I shall be there at 9 a.m. Eastern Time, and Randy will be trading live in front of you. The stock index is at 9:30. Good trading.